Spot Bitcoin ETF race. Winners and losers. Hey crypto citizens, Andrew here, host of the BitsPuls YouTube channel, where we keep up with the latest and greatest in all things cryptocurrency. Today we're looking at the winners and losers in the recent spot Bitcoin exchange-traded funds (ETFs) race. It's been a wild ride, so buckle up. Since these bad boys started trading in January, investors have poured a whopping $12.1 billion into them. And guess who's raking in the dough? The big boys. BlackRock's iShares and Fidelity investments have snagged over 80% of all the cash flowing into these ETFs. Why? Because they have the name recognition, the reach, and the distribution networks. As Brian Armour, a dude who knows his stuff at Morningstar, puts it, everyone is a client of iShares. Meanwhile, the Grayscale Bitcoin Trust, once the darling of crypto tracking ETFs, has seen a massive $17.2 billion exodus. They're down to a measly $17.6 billion in assets, a far cry from their February peak of $27.2 billion. What a difference a few spot Bitcoin ETFs can make. Armour sums it up nicely. It's been a successful launch for spot Bitcoin ETFs, but with some crazy price swings. The new funds got a huge influx of money, while Grayscale's new ETF saw major outflows. Now, let's rewind a bit. The SEC finally gave the green light to spot Bitcoin ETFs in January. Before that, ETFs couldn't directly own Bitcoin, so investors had to go through Grayscale's Bitcoin Trust or settle for ETFs that track Bitcoin's price through futures, which wasn't as spicy. Grayscale was the only game in town for US investors who wanted direct exposure to Bitcoin, aside from buying it themselves. But that all changed with the SEC's approval. ARK Investments and BlackRock jumped into the fray, and Grayscale won its lawsuit against the SEC. Fast forward to January 2024, and the floodgates opened. 11 ETF proposals got the go-ahead, and 10 of them started trading the next day, including Grayscale's converted ETF. Despite having the same, underlying asset, Bitcoin, these funds have seen varied success. The iShares Bitcoin Trust ETF has pulled in a cool $15.6 billion and now has a hefty $16.5 billion in assets. Fidelity's Wise Origin Bitcoin ETF isn't too shabby either, with $8.2 billion in inflows and $9.2 billion in assets. Even smaller players like ARK and Bitwise are getting a piece of the pie. The ARK21 Shares Bitcoin ETF has raked in $2.2 billion and now boasts $2.6 billion in total assets. Investors have thrown $1.8 billion at the Bitwise Bitcoin ETF, bringing its assets to a tidy $2 billion. But the biggest loser is clear: Grayscale. Investors have pulled a stunning $17.2 billion from its ETF. While Grayscale lowered its fees from 2% to 1.5%, that's still way higher than the other spot ETFs, whose expense ratios range from a mere 0.19% to 0.25%. Most of these funds even cut or eliminated fees during the launch period. iShares slashed its expense ratio to a sweet 0.12%, while others, like Fidelity, dropped theirs to 0 for a limited time. Each fund has a different deal, so check the fine print. Armour has his own theory about Grayscale's downfall. They didn't want to rock the boat. They made over $1 billion in fees from their Bitcoin Trust over the years. He thinks Grayscale may have believed they were too big to fail, a liquidity powerhouse where all the traders hung out. They might have also thought that investors wouldn't want to switch because of capital gains taxes. Well, they were wrong on both counts. Investors flocked to the new spot Bitcoin ETFs, and Grayscale's ETF fees are looking mighty expensive in comparison. So, there you have it. The spot Bitcoin ETF race has created some big winners and losers. BlackRock and Fidelity are laughing all the way to the bank, while Grayscale is licking its wounds. Remember, the crypto world is constantly evolving, so stay tuned to BitsPuls for all the latest updates. And don't forget to subscribe to our channel and give this video a big thumbs up. Thanks for watching, and keep cryptoing!